Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Happy New Year, John.
Happy New Year, Jim.
Aranea Resources, which you talked about on last Friday's Discovery Watch, hit a high of $7.20 on Thursday before backing off to close the day up $1.90 at $5. Has Keith Barron made the big strike at Lost Cities, which he told Bloomberg still had 1,000-to-1 odds of happening?
Well, at the request of the stock exchange, the company said they know of no reason why the stock was up, so I do not think there are any material developments. With regard to the 1,000-to-1 odds of there being a big strike at Lost Cities, Keith Barron has written me and said that Bloomberg misquoted him and has refused to retract his comment. What he was trying to say is that of gold occurrences, 1 in 1,000 can turn into a major mine, and that, in a sense, is a trivially true statement. One can quibble about, okay, which do we count? What do we actually count as a gold occurrence? But he did not want the audience or the writer of that report to understand that he thinks Lost Cities is an ultra long shot. Now, as for why the stock is up, it is up because on Thursday at about 2 o'clock Toronto time, Doug Casey issued an interesting speculations alert in which he recommended Lay Gold Mining, Fior Gold, and Lundin Gold, as well as Aranea. Now, Lay Gold is a Frank Giustra company which acquired the Los Filos gold mine in southern Mexico last year. Casey's rationale is that Goldcorp is going to repeat the success it had with the Escobal silver spin-out in Guatemala, which turned into a company called Tahoe Resources, and which enabled Goldcorp to sell 58 million shares of Tahoe stock in a bought deal at $17.20 on June 15th of 2015. And that was worth $1 billion for this. The problem was the stock was trading at $18.50 that day, and the next day it dropped below that price, and Bay Street was in serious danger of being stuck, because in a bought deal, the brokerage firm buys the offering, in this case is a secondary offering, not a primary offering of treasury stock, and has to find a home for the stock. And Bay Street did manage to get rid of it by the end of June, but by the middle of July, Tahoe had dropped to $11, handing in an instant 36% loss to all the institutions that bought this Tahoe stock. So that was not exactly a happy moment. The stock did manage to recover to $20 in mid-2016, but it did not do anything interesting for the year end when the institutions all have to report what wonderful positions they still have left, and the volume that Lay Gold traded was not exactly enough to find new homes for that those 58 million shares that Goldcorp unloaded. So it's today, of course, Tahoe's got a serious problem in that the NGOs managed to convince the government that the consultation process involving local indigenous people was not properly done ahead of this, and so operations were shut down. The class action predators are all over the company, and the stock languishes at $5. So when Doug Casey argues that this stock should be bought right up to a considerably higher price than it is now, because history might repeat itself, I'm not sure what he is thinking. And the market was unimpressed, and the Lay Gold maybe moved 25 cents, but did not move much in response to that. Now, Fior Gold is another Frank Giustra creation that came on the market last October when one of Giustra's Shell merged with the private company that acquired the Nevada assets from bankrupt Midway Gold, including the Pan project, which they seem to have turned around. This thing's going to produce 35,000 to 40,000 ounces a year, but the tout, like Leagold, as to why it's going to end up being valuable is that this is going to be an aggregator. These initial projects, just like Los Filos for Leagold and Pan for Fior, is supposed to be the basis for acquiring other companies. In the case of Los Filos, it's probably going to be bigger companies elsewhere in the world, but in the case of Fior Gold, it's supposed to be other sort of miserable Nevada producers, of which I can think of several that a cleanup operation will be done. So getting a higher market cap for Fior Gold is good because these are all going to be paper transactions. You acquire these ailing producers, and then you get lucky and have gold price start trending up. And this is an old formula for building a company, one that Frank Giustra specializes in. It's not really his forte to discover brand new deposits and create wealth from scratch. He's more of an M&A type of artist. The unfortunate thing with Casey's recommendation of this stock is that he tells people to buy it all the way to $4 now. Now, why would you do that? That's insane. There are 56 million units of private placement stock done at 31 cents in October, which are coming free trading later this month. This is an old-fashioned setting up of retail investors for getting a monster baseball bat in the head, courtesy of a so-called alert. Now, Casey's recommendation of Lundin Gold makes a lot more sense than the first two. Lundin Gold is a Lucas Lundin company, and it acquired the Fruta del Norte deposit in Ecuador from Kinross, and we talked about that last week. The mine's supposed to produce 300,000 ounces gold annually for 15 years. It's under construction, and it's expected to start in 2020, which is a few years down the road. But for some strange reason, Doug Casey tells his readers that it's about to go into production, which is a great reason to buy the stock now to more than double the current price. I'm not sure what he is thinking of in terms of but it's a very strange reason to buy the stock. Much better reason is the fact that this is a company which can grow its future production internally. In 2008, when Rafael Correa introduced all these resource nationalist policies for the mining industry, he created a total lose-lose situation for Ecuador stakeholders and for mine developers. And what Ron Hostein's team has done is gone in there and helped the government rethink a mining regime that makes sense. That's a win-win for everybody, and not so much a win only for the anti-mining NGOs who basically use all these excuses about indigenous people being affected by a project as a major donation bait type of a strategy. And what was interesting about Fruta del Norte is that it's at the northern edge of what they call a pull-apart basin that has been the focus of epithermal fluid flow, and the 13 million ounce deposit, gold-silver deposit, is a result of this particular geological setting. And Aurelian, of which Keith Barron was the driving geological force, it had spent $19 million in this region trying to find something substantial, and finally it was almost a Hail Mary pass with the last $1 million, did a fairly high-risk blind drill program, but based on some pretty shrewd geological sleuthing, and managed to hit this high-grade system. Now, since then, work by Lundin Gold has established doubled the length of this pull-apart basin. The feeling is that this entire basin has potential for a lot more than the 10-15 million ounces at Fruta del Norte itself. They are currently, in November, they started a 4,000-meter drill program on a target they call El Puma, which is about 12 kilometers to the south. So here we have a strategy where a good gold deposit is being put into production. The company owns a large district-scale land position, is engaging in additional exploration, and could build the ounces to a lot more over the next 2 years while it pushes the project into production. So this is a good pick of Doug Casey. I like this one. It's an emerging gold producer. It's not one of these manufactured things that grow by accretion. It's a company that's got serious people building a mine and doing discovery exploration. Now, the Aranea, Doug Casey has had that on his interesting speculations list for some time, and it doesn't seem to have, endeared the stock to his readers to any great extent. But in this particular alert, he tells his readers to buy the stock to $12, which at the 31 million fully diluted would give the company a $372 million valuation. That's pretty excessive for a project whose fundamentals consist of one, a treasure map, a regional geophysical survey, and a stream sediment sampling program whose results are still awaited. That's not to say that the company can't deliver something that's worth $12, but to say it should be bought right now is pretty much insane. And the entire alert is this completely discombobulated piece of reasoning. The reason supposedly that the stock is going to go higher is that Keith Barron owns 70% of the stock and is not going to sell because he thinks he's going to have a big strike. But that's nonsense, because somebody who owns 70% of a public company can't sell any shares because of securities regulations, and even if he tried, the stock would collapse in an instant. So that's a really dumb reason to buy the stock. What I think is happening is that Doug Casey is trying to grab some of this crazy speculation activity that's going into all these non-resource sector companies and try and harvest it for the resource sector. And in that regard, I'm sympathetic to his effort, because what's been happening is absolutely insane. On Wednesday, TSX Venture Trading hit $468 million worth of value, and that doesn't even include the alternative trading platforms. The 1,100 TSX Venture listings that I follow and that are supposedly involved in the resource sector, they traded only $47 million. That's 10% of the traded value. Although of the 477 million share volume, that was about 38-40%. Now, this volume is not the highest ever. The highest ever was 606 million shares on January 13th, 2011, which is the all-time record, and that was in the midst of the post-crash revival in the resource sector. There are 13 other higher volume days, and they're all since in that period 2010 to 2011. So we haven't yet made all-time records, but the idea that the resource sector has dwindled to 10% of the traded value is very disconcerting for myself, Discovery Watch, and anybody who's interested in the resource juniors. What we're seeing is speculative capital rushing into stories whose fundamental value cannot be quantified. Marijuana deals, what's it going to be worth at the end of the day? Well, quite likely as much as any other agricultural product that doesn't lend itself to branding. What is blockchain going to be worth at the end of the day? Well, it's just going to be a cost center for businesses, just as, having a MasterCard or Visa processing system in place is going to be. These things have turned into a temporary bubble. They are not transformational the way the Internet was back in 1999 when we had a similar situation where the spec money shunned the resource sector and flowed into any little junior, changing its name to .com or even talking about branching out into this sector. So what Doug Casey has done with the Aranea and his alert thing is he's put out a tout that doesn't have any fundamental reason for the stock to go higher other than the tout itself. And he's done an old bundling strategy where he has taken several, real companies and then added to it a company that's high risk, not very liquid, which could conceivably deliver a fantastic discovery worth $1 to $2 billion, hasn't done yet. And until they've spent several years failing to do that, you can't say that it won't. So he's now trying to map the same sort of mindless speculation that's flooding into the non-resource stocks into the resource sector. My feeling is that all of this will collapse in the next while. Resource juniors should resist the temptation to get into that sort of game. I think we are heading into a stronger metals market, and because this bubble is not based on any transformational trends, it will come and go, and we will not have a scenario where for several years after the dot-com bubble collapsed, the resource juniors continued to languish in the gutter.
We'll have more Discovery Watch with John Kaiser right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Alto Ventures and its Oxford Lake project was a good example of an early-stage junior hoping to make a big gold discovery in Canada's least explored greenstone belt. The junior, however, was blindsided by some really bad news in December, a week ahead of its planned drilling program. Can you elaborate?
Yeah, Jim, the Alto story is a classic example of why the deck is so rigged against resource juniors. When you get some little blockchain BS company coming along and saying they're going to break into this sector, nobody can really do anything to sabotage this. In this case, we had a junior with a legitimate, serious technical team developing this project in the Oxford Lake, Knee Lake district of northern Manitoba. It's a godforsaken part of the world with like swamp and black flies and so on. It has a First Nations group living in the area. There's the Boonee Bonibee Cree Nation in whose jurisdiction that was. Alto Ventures has worked with the local Aboriginal group to make sure they're doing everything okay. They were planning on hiring a lot of them for a drill program that was supposed to start just before Christmas. But there was one step still needed, and that's Manitoba. The government runs these town hall consultation meetings, which is sort of the last chance for anybody to come in and object that there's something not right or whatever. And in this case, because they've been working with everybody, it assumed that it would just be the usual anti-mining people who might show up and complain about possibly turning this wilderness into a thriving gold district. But all of a sudden, in from Toronto flew a lawyer called Kate Kempton, who works for a firm called OKT, which specializes in Aboriginal law and has as partners political chameleons like Bob Rae, former Premier of Ontario, and which has been very active in keeping the Ring of Fire in northern Ontario sort of stuck, going nowhere. She showed up, took command of the meeting, and basically presented some 15-page agreement to Alto saying there's a need for an archaeological study to confirm that there is not a sacred burial ground in the Oxford Lake area. Now, this came as a complete shock to Alto because they're cognizant of these issues. They have been working with the local Cree people to make sure that if there are any issues that we can take care of it. They actually mapped the entire shoreline of Oxford Lake from a boat, because that's, of course, the only place outcrop actually shows up is at the edge of the water there. And while they did that, they saw no evidence anywhere of doing the of old hunting camp or even old village site or anything that might suggest that this was an area of human activity. And if it was an issue, it could have been taken care of a long time ago, and they could have bundled it with the work they did this summer to make sure there is no such problem. But instead, this lawyer who specializes in this type of extortion racket shows up and hands them some 5-figure invoice for her services on behalf of the local Cree Nation to pay for her recognizing that there might be a problem. And of course, it's a week before the drill program's supposed to start. Oxford Lake already has ice on it. There's snow blanketing everything. It is not possible to do an archaeological survey in winter. So in effect, what she did was shut down this program. And she did it under this mantle of protecting indigenous rights, when really what she did, she's part of the anti-mining lobby. She stopped the exploration program in its track. Even if they agreed to do an archaeological survey, it would be a year from now before any work could be done. So here's this junior. It's one of my recommendations. I had him at the Metals Investor Forum a couple times this year. It's a high-risk, high-reward exploration play, and some lawyer can parachute in from out of nowhere, kill whatever jobs the local people might have had during this summer, possibly postpone forever the possibility that this part of northern Manitoba could turn into another Timmins district, a thriving gold camp with lots of jobs for everybody. This type of blindsiding happens to the resource junior sector. It's no wonder people say, screw the real world. Let's just go after blockchain or marijuana fantasies. There's nothing anybody can do to disrupt those fantasies, to disrupt the process of creating fundamental wealth from scratch.
Coming up, John Kaiser's closing comments.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with John Kaiser. John, the U.S. has reduced its federal tax rate from 35 to 21%. How does this affect the Stibnite project of Midas Gold?
The original tax rate for the Stibnite project in Idaho was 43.4%, of which 35% was the federal rate. That's now 29.4%. And it does make a difference, though not enough for the Stibnite project to clear a major development threshold at today's metal prices. I've rerun my cash flow model, which is based on the company's 2014 pre-feasibility study, and at the $1,350 gold, which was their base case, the after-tax NPV originally was $800 million US at 5% and $457 million at 10%. At the new lower tax rate, it jumps to $962 million at 5% and $564 million at 10%. So that's a pretty good boost. It's a 20% improvement. And in fact, the mining industry in the United States has been listed as the sector that will benefit the most from this tax change, because of course mining companies' operations are in the United States, not anywhere else. So the change is significant, but what's really going to change the outlook for the Stibnite project is the results of this week's, last year's exploration efforts. They've done considerable infill drilling. They believe that this will bring a lot of ounces, high-grade ounces, back into the early part of the ore schedule where they originally were in the PEA, but disappeared when you used the more stringent standards for a proven and probable reserve. And they've also done work on better understanding the controls of the high-grade antimony mineralization. It turns out that the antimony is controlled by structures that rip through the entire system, gold mineralized disseminated system, and continue on into the surrounding wall rocks, where there isn't really any gold, but the antimony is still present. And they've realized that it's possible that as we develop this open pit, we could drive an adit on the outside of it to access these high-grade vein structures. Now, they're not going to include that into their resource development plan because that would upset the whole permitting process, which hopefully will come to an end sometime late 2018. But it opens the possibility that if the United States required an emergency supply of antimony, this could be developed to access high-grade antimony and supply it to the domestic market. And is there reason to believe that the United States might have such a need in the next few years? Well, there certainly is, because the ongoing conflict with North Korea, the bigger problem that also ties in with Trump's desire to pull the plug on China's trading activities with the United States, has one of the side effects that no more antimony is going to come to fuel America's domestic manufacturing industry if a giant trade war erupts with China, possibly as a side effect of the whole North Korean situation spinning out of control. Now, the Stibnite mining plan originally had 200 million pounds of antimony supply in the PEA, but that half of that also disappeared because of inadequate drill spacing for the standards of the pre-feasibility study. I suspect that those 100 million pounds will also be repatriated, and the Stibnite mine could end up providing 8% of current global antimony supply. So the strategic reasons for Stibnite going ahead have increased significantly. The fundamentals are coming together. We'll get the evidence when they publish an updated resource estimate sometime later this year. But the really important thing for Stibnite project is that even with the changed the changed tax rate and gold back at $1,320, just $30 below their base case price, the market does not want to use 5% in calculating the NPV. And the rule of thumb is that the NPV should match the capex, which is nearly $1 billion. It does that at 5%, but not at 10%. So the stock has been sliding thanks to investor fatigue and the siren call of things where you cannot calculate the fundamentals and do what I'm doing right now, saying that at $13.20, nobody's going to make a decision to develop this unless there are strategic other additional reasons for doing so. But a mere move to $1,600 changes the existing numbers dramatically so that all the hurdles are met. At the current pricing and the current ore schedule, the 22-23% internal rate of return is above the threshold required, but the NPV is what still needs to benefit. So Midas Gold benefits from the tax rate, not enough right now with the current configuration, but if they deliver on the improved resource estimate where you have the more ore in the early part of the stage, this thing could hit that threshold without any further metal price changes. But I do believe that gold's run above $1,300 after being bashed back to 1250 last year. That's pretty impressive, and I don't see a lot of geopolitical optimism in the year ahead, which should result in gold going down. And even if interest rates start marching up, the bigger effect that they're likely to have is a collapse in the bond market, which is going to create another financial panic, which hopefully this time around will be beneficial to gold rather than harmful as it was in 2008, because I do not think the scale of the financial problems in the system is anything as bad as it was back in 2008.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.